the wind turbines going round and round, which have to last for 20 years, need to be made of the most incredibly tough composite material. Now, that all sounds great. We all think a wind farm is very environmentally friendly, but what do you do with these giant wind turbines at the end of their lives?
Hello, I'm Natalie Kenway, Global Head of ESG Insight for ESG Clarity. Welcome to this exclusive interview with Sarasin & Partners Deputy CIO Henry Boucher. We will be chatting about a new fund for the firm. So thank you very much for joining me, Henry.
Hi, Natalie.
Sarasin is adding a thematic fund to its range, named the Tomorrow's World Multi-Asset Fund. We have included some detail in the written part of this article on the structure and the companies that the fund will be investing in. But Henry, can you explain the drivers behind launching this strategy?
Wow, yes, there were three big drivers, I think, that it's important to think about. The first is what people are actually saying to us. So we've been hearing all sorts of different things, slightly confused messages from retail investors, to be honest. But when we really spent time listening to their needs and talking to their advisors, what we found was that sustainability is something that they're all talking about, and they want it done properly. I think David Attenborough's films like Blue Planet, Living Planet, Planet Earth are now amongst the most popular TV series sort of globally. And they're just part of this evolving sort of zeitgeist, a sort of common vision for a better future world. And that's really where the title came from, Tomorrow's World. But we heard that people don't really want their investments to be involved in the things that are causing harm. In particular, a lot of the messaging was, I really don't want to invest in fossil fuel companies anymore because they're causing climate change. Or, on the David Attenborough programs, I saw companies causing plastic pollution. I don't want that in my portfolio. These were quite strong messages, and we wanted that to be at the heart of the fund. So that was really point one. Point two is that inevitably, this is their investments for the long term. They're not going to spend every day thinking about it. And therefore, it needs to meet their needs and their risk profile. And balanced funds are amongst the most popular funds out there, and they want the sustainability issues properly considered, not just in the equities, but across every investment in every asset class. So that was the second important factor. And then thirdly, investing for the future isn't just about cherry picking a few sort of nice sounding investments. There's been a huge amount of interest in electric cars or Tesla. But actually what people want is a well-structured, diversified portfolio with a sort of proven investment strategy where you can pick sort of themes and positive investments over time and the long term. And therefore, we felt that really demanded our full investment team and all of the in-house investment resources and experience that we have in Sarasin & Partners, so that it's a really proper team effort on this fund, managing the solution for people. And those three things, I think, were the drivers for Tomorrow's World.
In terms of the companies that you select for the fund, what do they have in common in terms of their aspirations and what they're trying to achieve?
So there's really two crucial characteristics. The first is purpose. Now, what do we mean by a company's purpose? It's that they set out to meet the needs of their customers today profitably, but without profiting from causing significant harm. And that's really important for each one. There's this sense of purpose, but positive purpose. And so what we do to establish that is we assess each stock, whether that's an equity, a bond, or an alternative, on 10 different factors. So 5S and 5E factors, so social factors and environmental factors. So we're looking at sort of climate change, impact on land, on air, the materials they produce, so the circular economy, and then on the social side, the impact not just on their customers, but their employees, their supply chain, wider society. All of these factors have to be thought about. And we do that for every single investment across everything that we do at Sarasin & Partners. So that's a unique process, and it's taken us a long time to establish all of that detailed underlying research. But from it, we apply traffic lights to every single stock, so that if we think they are causing really significant harm in some way too many carbon emissions, for instance, they will get a red traffic light on climate change. And that means they're not meeting a purpose. In other words, they're not meeting the needs of their customers without profiting from causing significant harm. So the red traffic light on significant harm means they're out, that they're taken out of the portfolio. So that's in a way, if you like, the editing process, but the creative process is very much the core of Sarasin and Partners. It's using our thematic process. So all of the investments in the portfolio are basically evolving from our core theme investment work, which is looking forward over the next decade, thinking about how companies will benefit from positive change. And that's not just about environmental positive change, it's about all positive changes. So clearly we're all so much more aware of digitalization, which has accelerated dramatically during lockdown. But we're in the middle of it. It's a multi-year transformation, and so is the automation associated with that as we begin to get things like machine vision and artificial intelligence, all beginning to really change the way that machines can operate. So that's one really interesting trend that's in our process. The other theme, well, several other themes, we have 5 in total. The second is consumption related. So if you think about consumption patterns and how they're changing, I mean, again, the change is very rapid. And so whether that's to healthier eating or esports or home delivery of goods, everyone's consumption patterns are changing very significantly. And those evolutions over time provide some really interesting investment opportunities. And then we have demographics. You can't ignore aging. The world population of over 65-year-olds is currently about 750 million people, but that's set to double over just the next 25 years to 1.5 billion people. And that has huge implications for savings, for leisure, healthcare. We like to think of old people's consumption habits differing because they're about pills, pets, and cosmetics. It's a different set of consumption patterns. And of course, climate change is the 5th of our big themes, and that's going to cause trillions of dollars of investment as we re-engineer our energy system. And what we're doing is we're looking across those themes to find the most positive ones, and above all, the ones, as I say, with purpose, that basically are able to meet their customers' needs, but without profiting from causing significant harm.
Fantastic. I can see where the Tomorrow's World name came up now, with you looking so far ahead into the different themes of the future. So how does the makeup of the fund look at the moment? What's the asset allocation looking like to equities, bonds? Are you overweight any particular asset classes or regions?
So it's a balanced fund. So it's about 60 to 65% in global equities. So we don't have necessarily a big tilt towards the UK, which obviously a lot of balanced funds do. The UK market is just one of those in the world. And indeed, the mix of companies here isn't necessarily the most sustainable. We have obviously a lot of resource companies and oil companies in the UK index. So we've just chosen a global approach, which is true of all the investments at Sarasin Partners. And we think about the bond section in a really interesting way as well. We have about 25% in bonds, but I think they're a bit different from many other people's bond investments in that we are typically looking for investments which have some kind of social purpose as well. So in the sterling bond market, there's a huge range of new issuance, whether that's in green bonds or from universities who are obviously using the money to provide education, housing associations. There are lots of different ways in which we can invest with some interesting sort of purpose, not just in the equities, but in the bond section. And then finally, the alternatives. So about 10% normally will be the weighting in alternatives. And there, again, we're very interested in some of the venture capital areas towards particularly sort of new and evolving health technologies, which have been so important, of course, in the development of the vaccines in the last year. But there are lots of other really interesting sort of venture capital type investments for us to look at. And also, inevitably, renewable energy infrastructure is part of what we're going to have in the fund. So no sort of unexpected regional biases. It's a broad-based fund. But obviously we won't have very much in the environmentally damaging sectors like industrials, energy and consumer goods.
And how do you see this strategy sitting within an advisor portfolio?
Well, at the outset, I said we spent a long time just listening to advisors and asking them to help us sort of design the fund. So I think, the big answer we got is that, many clients are effectively sort of balanced in their sort of requirements for the long term. And therefore, I think that most advisors are looking for a solution that is sort of in common with that very sort of universal requirement, but equally answers the point about being greener. And So hence all the work that I was talking about in relation to the traffic lights and really making sure there are no significant adverse impacts in the portfolio. And it's basically meeting a combination of needs that is for effectively a traditional balanced approach, but with this real attention to true sustainability and thinking about all of the different requirements or concerns that people have, as I say, ranging across the different environmental and social factors.
Can you share some examples of the companies that feature in the portfolio? And I know it's early days, but perhaps how you've been engaging with them already.
Yes, so it's very early days for the engagements, but I can tell you a bit. I mean, within the portfolio, as I say, a lot of these are part of our core buy list, and they're stocks that we've known a very long time. So, for instance, CSL is an Australian healthcare company that, in fact, works on vaccines, interestingly, but actually, its main thing is dealing with blood products, which are necessary for operations. And when you think of what I was saying earlier on about the increasingly aging population, well, there are going to be many more sort of hip replacements and other sorts of operations in the years ahead. So effectively, they operate, if you like, in a growth market. We've known them since 2006. We've been investing in CSL. So we think it's a really interesting healthcare company. It's dealing with the needs of today and of tomorrow. It actually is pretty well managed. So we meet them regularly, but we don't have necessarily very strong issues to engage with them on that we would have with some others. Now, again, because of the red traffic light system in this fund, we don't necessarily see the need to engage to the point where we might divest with these portfolios. What we're generally doing is engaging to sort of tilt them in the right direction. And basically those which might have an amber traffic light on something, we're pushing to get them in the right direction. So an example of that would be Ørsted, the Danish offshore wind company. They both install and operate offshore wind farms. Now, if you think of the nature of a wind turbine, I mean, some of them are absolutely enormous now. The biggest ones are about the height of the Shard in London. I mean, that is the most extraordinary technology. But the wind turbines going round and round, which have to last for 20 years, need to be made of the most incredibly tough composite material. Now, that all sounds great. We all think a wind farm is very environmentally friendly, but what do you do with these giant wind turbines at the end of their lives? Well, unfortunately, Ørsted don't have a good answer to that, and we've been engaging with them to see if there's a way in which they can be repurposed or recycled in some way. So those are examples of equities that we own in the portfolio. There are many others, obviously, about aiming for sort of 35, 40 different equity holdings. I think the bond holdings are really interesting because there we have invested in bonds issued by people like the Wellcome Trust, who are obviously a charity that is spending its money looking into health research. We've got a number of bonds issued by various different educational establishments, particularly the universities in the UK. Housing associations would be others that we've invested in the bond portfolio. So that just gives you, I hope, a little bit of a flavour of the sorts of things that we've actually bought.
Yes, thank you. And finally, the last question I wanted to ask: what you're hoping to achieve with the fund? What are the targeted returns, and what are your aspirations for the fund?
So this is a balanced fund. It has modest long-term aspirations to basically, over the long term, produce a real return. That means, you know, a decent margin above the rate of inflation, sort of 3% or above inflation would be the sort of area that we would aspire to over the long term. But I think that the big thing is to reflect the name of the fund, which is Tomorrow's World. I mean, if we think about climate change, pollution, biodiversity lost, inequality, these are really critical issues over the next decade, and they are a key consideration for many people. So we do see this fund basically as being one that is likely to grow really considerably as more and more people focus on these issues and ask them to be integrated in their investments. But we do have in the back of our minds this point that, you know, we really want this fund to be successful, to stick within its sort of balanced risk category, and therefore having a proven investment process. We've been managing multi-asset portfolios for decades, and avoiding the growing risks in businesses that might profit from causing significant harm. By avoiding those, I think we can deliver what most people will hope will be a good investment for tomorrow's world.
Great. Well, thank you very much for your time today and good luck with the strategy.
Thanks, Natalie.